All right, what is up, guys? This is Ganondorf here again. I'm gonna do an unedited video covering a Dow Jones YM trade that I took today. But it's kind of gonna. Man, I can't talk right now. It's kind of going to get into an idea that I've been working out in my head about. Um, just the way that the market likes to move. And today I used that idea. I've been really trying to work out in my head the last few days, and it worked out really well. So seems like I'm right. And the way I came up with this idea was actually observing USD JPY since I've been short, and just how I could have executed this trade better, and some of the logic behind the way it's all moving. So yeah, let's go ahead and get into the Dow Jones trade. So let's start with the higher time frame. Obviously, we've had a major sell-off. For me, the logic behind this trade is still, well, let's just get into it. So Dow Jones on the higher time frame, even on the weekly, it's very bearish. We came down, created a displacement and a market structure shift using this low. If we zoom in back into this area where we created that displacement on the daily, it doesn't look as clean, but it is a real. Well, wait, let's look real quick right here. This is the low we're looking at. This is low, that last consolidation. So this is a real displacement because this price action came down and respected some of the PD arrays here. If you know ICT, I trade ICT, so all the terms here are going to be ICT terms. So if you don't know what those are, you can go watch ICT. He's got everything on there. But yeah, so we've been bearish. Obviously, we failed to get higher here, create any displacement above these highs. We didn't even take them out. And there was a fair value gap here, liquidity void. Rejected, created downside displacement again, and then further downside, no clear displacement besides on this level, this order block. And now we've been bouncing as we've entered this order block. So one might even say, this was the last order block, and whatever. Doesn't really matter for me right now. But anyways, this was actually a long trade because of the way we've been moving. So if you look at this pullback here we had the last few days, did not create any displacement. And since we've come so deep here, I am expecting a retracement higher because we've taken out so many lows without having a pullback and then entering this fair value gap. This was the real order block, in my opinion, that got respected. Like if you measure this here or this, boom, that's right at the mid-range. If you use the actual low, boom, right at the mid-range of that. And that's what I usually see as a pattern. Anyways, we rejected this bearish order block, failed to create any sort of displacement because we haven't even had anything to do that with. But yeah, we got a sharp buyback, which shows that we may be looking to continue higher. And because we've filled in so much of a liquidity void, my bias later on, I realized this, not in today I realized this, but we came, swept this. I was targeting this as a significant liquidity sweep, which yesterday, this is where the trade comes together for me. Yesterday PM session, we finally got that move above it after creating this order block. So we got that down move, failed here to create displacement with a nice buyback. So to me, I realized this would probably head higher. Obviously we did come higher, broke this high again, and failed to break this high, creating equal highs as we had the sell-off. So as we had that sell-off, I'm like, okay, I'm still looking long because I think we're going to take this out. I think we need, because of how all of this is reacting here, to me it's making me think we need some sort of higher time frame liquidity. If we're going to keep going down, we need a higher time frame liquidity. So if you just use the displacement, we're not even in a premium for us to head back down. So we need higher prices, in my opinion. So that was the higher time frame bias was long, which is why I was looking long for a bounce somewhere. I was thinking, okay, where would we bounce now that we've had this sell-off? Okay, well, what are the signals for a bounce, and where would be the logical area for this to, come down, and what PD array would I look for to get in? Would it be, maybe this as like an order block? Would it be, you know what I mean? Just looking for an idea here. And for me, yesterday's PM session sell-off made a lot of sense now that we had swept it. And this was what I would consider an intermediate term order block, since all of this has already been rebalanced many times. So using this order block, if you just look at that midline, boom, nailed it and respected it, especially as we bought this back up. We also had the indices all moving higher while we were down in there. So if you look here, let's look at the 15-minute. So this is what we were just looking at, was the Dow. The other two indices have been just grinding higher, as you can see. NASDAQ had higher obvious targets above here. Same thing with the ES. So everything was in alignment. Everything looked bullish. It was just where are we going to reverse here, since the Dow's selling off and the others had already been reversing. So that was the logical area for me. Super obvious because of this, what I would call an order block. And yeah, I got in here somewhere, pretty heavy, and was able to scale out above 3R. So if you look here, I'm not sure exactly where I got in. I think it's probably like that. And I was risking the lows. If you just look at 3R, so I started scaling out as I got above 3R, and I still have a runner all the way up above these highs, so you can see that's a really nice, close to 7R trade, but that's just a small partial left. But yeah, the logic really is with that idea I had gotten from USD JPY. So that idea more specifically isn't anything new. It's more so just I feel like I'm finally working out the logic behind like market structure shifts. So just using this reversal area, how we came down, how this didn't create on the higher time frame. We didn't create any displacement besides above this high. So I knew we'd get a sell-off here. I just missed it this week. That was actually my weekly plan, was to look for buy the dip opportunity. Missed that, but it's okay. And that's because we failed here. Should have known. Should have been anticipating this. But we failed here. This was the first area to reject. And if you just look at the other charts, that would have become a lot more apparent. Just watching how these all came up together. And anyways, getting off topic. But yeah, what my idea really has to do with is just the market structure shifts. I feel like I've been really unclear with those. Like, what's a real market structure shift? And not only that, but looking for failed market structure shifts. And that really cleared up a lot of things for me. such as this. Like, this is so obvious to me. Like, look how we came above this high. We did create displacement for this candle, but then immediately following we had a sell-off, which basically showed that we weren't really creating displacement here. Not necessarily saying we're reversing though, is what I'm realizing. So this doesn't say we reverse, it's just showing we have some weakness. But as you can see here, it respected these fair value gaps and bounced on the order block high. So it got bought back up. Like I said, this doesn't necessarily mean we're going to reverse because we failed here. It just means we're going to be weak. And since we held this, that to me means that we would head higher. So we headed higher. We swept the high, came back down, swept the high again, and then had that big drop. So that was super clear to me. Let's just see that order block. Yeah, look at that. So yeah, just really getting clear on these market structure shifts. What's a real shift and how are we holding above highs and lows? Just looking at that. And I understand that the reason why it is somewhat unclear and why it's taken me a while to really figure this out is it is more of an art, I think, just being able to understand and look at the chart after lots and lots of charts experience, just seeing how the ebbs and the flows of the market really move. And not only that, using the other two indices in tandem with that as huge indicators. So the other thing I use, obviously, as we've covered before, is the flow. So that one's a nice one. So yeah, that really covers the trade. As you can see here, just you can say, oh, it dipped back into this fair value gap, or oh, it respected the order block, whatever you want to say. But for me, what was the telltale sign was actually the way we came down and then immediately just rejected. Like, we did not create displacement. Displacement would have been if we created a candle. Let's say this is the candle here that just came so deep and just displaced all these orders, and then the next candle didn't give a F about, I don't know if I can swear on this channel, I don't even know, didn't give a shiz about the displacement. So yeah, I'm still working on how I can explain how that works, but to me this is just the obvious sign. So if you just look at this candle and then look at the following candle, if you jump to the 30-minute, boom, it's gone. So no displacement. And the higher the time frame, the stronger the more superior, and the more you should listen. Like, it trumps the lower time frames, like what it's telling you. For example, if the daily has a displacement, right? So let's say this is a displacement here, right? Above this swing. But if you go to the weekly, that swing isn't even there. So saying that this is a displacement now is on the higher time frame if you're looking for, a bigger displacement on the macro scale, then your argument's kind of gone. Obviously you can't see what's going on here on the weekly because it's too big of a time frame. But let's say we look at the 2-day, because that would be grouping together these other candles together. And we still have a market structure shift. So to me, that's kind of the telltale sign. I mean, just look at this move up and then move back down. This was a straight up counterparty to all of these orders, but then it stopped here. So what does that tell you? So to me, it tells me we're probably going to retrace higher. If we're going to keep going down, we need to go higher to get short, to get people short again, to get that liquidity. So to me, yeah, it's all kind of an art to understand all of the liquidity. Everything is just liquidity. And yeah, anyways, hope that wasn't confusing. That was more so for me to explain my trade and go over some of the logic behind how I see how the market moves. As you can see, this candle here kind of eliminates that candle, especially since it's immediately the next candle. So yeah, that's about it. I hope you guys enjoyed that and got something if you're watching, since this is a small channel obviously, but that's all I really have to explain that. Maybe I can dive into more of the JPY, because this is where it really got clear for me. If you look here, no displacement here, and then no displacement here either. Immediate counterparties. Time is everything here. The only displacement we had was in here. If you zoom in, boom, there, that was the displacement. These both failed to displace, so for me, this range is the range in play. And as you can see, that's the 50%. Boom, we came up above the 50%, and now we're moving back down. So just very interesting, like seeing how these moves come down and don't create a displacement. Just quick wick, buys back up. Doesn't necessarily mean we're reversing. Boom, quick wick, got all back, bought back up. So this was a sign of a reversal, since we got a higher time frame market structure shift here. Look at that, that's super clean, has respect. So that was an obvious sign we'd at least take this high out, if not even this high, but not necessarily. More so this high for sure, but inside of this range. Obviously we had this fair value gap, old fair value gap here, and that's where we saw the rejection. So yeah, this is just it's just so cool for me to go and look at these things and see how they all work and see them on the charts, and it really is starting to get more clear as we see how the market moves here. So just to keep this further, I mean, if I look over at the ES, the same thing happened. Oh yeah, the ES and NASDAQ were great examples. So look how the ES did create displacement here. Boom, moved down, kept going down, counterparty rebalances, but takes its time and then finally moves its way back up. So for me, that should have been obvious, obviously with hindsight, that we would reject inside of this displacement, holding this high. Whereas the NASDAQ's completely different story, even though very similar. So this is the same move down we saw on the ES, but if you look here, no displacement, it held. So what did it do? Takes out the high right there. So it's more clear on the 1 hour. Look at that. Entices shorts before coming back and just taking it out twice. And then finally gets the move down because we did get a displacement here. So if you did the same thing as I'm saying on the JPY and use that as the real displacement leg, then you would buy into a discount. Well, we were targeting above this high, so the logical entry would have been here. Or, sorry, this is far away. I'm just trying to keep it. You can see the level. Boom. And then you would have risked that candle. And then your target would have been below these lows or further. So look at that, 5-hour trade. If you would have been able to scale out at 3-hour easy too. So yeah, things are just making more sense to me as I see the way the market moves. How are we moving when we sweep lows? How are we moving when we sweep highs or PD arrays. How did we move when we came down here? Oh, we immediately had a counterparty and then failed to displace above this high. Boom, weakness, but that doesn't necessarily mean we're fully reversing. We were still rejecting these lows here. So this was a buy. And then it got really clear here. I don't know if it's in the, yeah, look at this. So another example here. Failed to create displacement. We need to get more orders to get long into the displacement leg, into discount. Boom, discount. Could have bought that and held for a swing. Failed to really create a nice displacement above this swing. Failed, so this displacement wasn't legit. Wiped it out. Then came into this fair value gap, which is, this would have been, this is the setup I'm really talking about. So look how we didn't create any displacement here. That was really obvious. We just moved above and then just held and then moved back down. Well, are we just gonna reject this fair value gap right here? No, because this was not a clear move higher. If this had gone more like this, let's turn this off. If this had just gone straight up and then failed, then yeah, I think that would have been a place to get long. But because of the weakness here, and we're in a previous displacement leg, to me that's like, boom, so obvious. So this is something I'm recently just really understanding, and it's really awesome. So anyways, I'm just going on and on. That's the end of the video. I'm gonna post this. It's just kind of a rant, but yeah, thanks for watching.